Hello and welcome to EBAday 2023 in Madrid. I'm Hannah Wallace, and kindly stepping away from the busy event is Michèle Zaquine, Global Payment Solutions at HSBC, and we're talking about the impact of payment trends on future Treasury teams. Michèle, thank you so much for coming to speak with us today. It's really good to see you again.
Good morning, Hannah. It's great to be here again. After 1 year, last year we were talking about the buzzwords and things like open banking and consumer experiences on payments. But this year I wanted to come back on some fundamentals about treasury teams and their organization and those payment trends and technologies that are impacting these teams today.
Because it is a really exciting space, because there's a variety of opportunity and technology and solutions to help better manage those treasury teams. But it's not always easy to see what are the game changers. So Let's start there. What do you think are the big top trends in treasury?
So to be clear, and I must say that I've seen a real increase in interest and focus from treasury teams today as they look at their organization and they want to revisit their processes. They want to improve their operational processes and procedures. They are looking to adopt or adapt technologies, but it's about making those right changes. And we can sense that the pandemic now is behind. We've moved from a negative to positive interest rate. Regulation is here each year. You need to adapt to it. But the real question is, what technologies, what will make the difference to my treasury organization? And so when we have these discussions with customers, the kinds of themes that we see are coming back on a regular basis is, what about corporate treasury APIs? Is that a game changer? Do I need this? Do I need a real-time experience? What about real-time payments? Is there a real use case behind that for my business, right? And again, virtual accounts. We've been talking about virtual accounts for so many years, but I can really say that this year, over the last 12 months, I have had numerous continual discussions with customers around the value of virtual accounts. But we equally see discussions around cash flow for forecasting for customers, as for a lot of treasury teams, that's still a semi-automated, if not manual process. And again, there are some models out there that are providing good solutions with AI. So I think it's a very interesting period. I can certainly say that from my experience in discussions with customers, they're looking at how they're going to transform their treasury and what are the right choices to make. And technology is key.
As you say, it's a really interesting space at the moment. And I want to touch on those innovations you've highlighted already and talk about some of the pros and the cons around those innovations. And perhaps you could share some use cases within Treasury as well.
So I'd like to start off with corporate Treasury APIs, because this is one that comes up a great deal. And people talk about APIs. Well, APIs, it's nothing more than two pieces of software speaking to each other in real time, to make it simple. But we use it all the time in our consumer lives. We don't think about it twice. But if you transpose that into a corporate treasury logic, it's about communicating with your banking partners with a real-time experience. And it means what? Consuming data that you can leverage so you can manage risks, so you can do better decision making. But it's potentially also initiating payments. So that, again, you can better manage your own customer's journey. So what is the use case, right? And I think the best way to talk about this is to illustrate maybe two examples.
Yes, please.
One of them is about pulling data. And this is a customer, for example, that had issues with visibility on his distribution chain and his working capital because his TMS, in fact, only provided him with end-of-day statements. So that meant that reconciliation was not as optimal, put it that way. Looking at his organization, we suggested that maybe he could use the APIs to consume data and leverage that data into his cash flow forecasting platform, which then provided him with greater visibility on his incoming flows. That was a game changer for this customer because, in effect, it immediately improved his distribution chain, was able to let goods go faster, and obviously improved his working capital. But the second example is an interesting one because this time I'm not going to talk about consuming data, but about payments initiation. Now, this is a customer that was in the digital space with an e-commerce platform providing food services to his customers. And basically, he had a fleet of delivery drivers, and he wanted to basically build the loyalty with these drivers. So we looked at his process from ordering to delivering, all those different steps, and suggested that maybe one of the solutions could be to use APIs to initiate payments. So what did the end solution look like? It looked like, and looks like today, drivers that deliver goods that have been ordered on the platform very rapidly, and the driver then goes on to the merchant's API and says, goods been delivered to Hannah, she's happy. And then there we go, it's ordered and it's confirmed, and the customer, the driver then gets immediately paid. In the country where this was put in place, there are real-time payment rails. Drivers were very, very pleased. They were immediately paid, but at the same time, our customers and the customer that put this in place optimized his reconciliation by 30 man-hours a month. So it's quite considerable. So that shows you some of the case studies. What I'd just like to add, because there are pros and cons, you don't put in corporate treasury APIs if you don't need them. They need to bring value in your business model. And you need to maintain potentially connectivity channels, the traditional connectivity channels, because it's a question of making the right choices to solve whatever problems you have. So it's not one replaces the other, it's what is the problem I'm solving.
Those are really helpful use cases, and as you say, they highlight what is a game changer and what isn't as well. And I just want to touch on that real-time aspect as well. What extent are real-time payments and collections having an impact on Treasury, do you think? That's an interesting one.
So I think it is an interesting one, because obviously we all know that real-time payment schemes around the world, there are more than 60 markets that have real-time payments in one shape or manner. And certainly in Europe, we have real-time payments as well. So we know that real-time payments in effect are progressively increasing from year to year. If you look at recent statistics across the globe, they've increased by 63%. If you look at the ACI report, that's quite considerable. And we're talking about numbers of the likes of 195 billion. It's a lot of numbers, right? In Europe, reachability is not full, but there's a regulation coming down the line that's going to maybe address some of the challenges and barriers, but as well improve that reachability. When we look at use cases today in Treasury teams, it's a more difficult debate, because in Europe, BAU, SCT, you can be paid same day. So I think the real game changer is the availability 24/7. That's a really important for Treasury teams, and it can be used to either manage ad hoc payments, urgent payments, or salary payments in the gig economy. When I'm talking about Europe, we're still very much at the early stages, but I'd like to just talk about the UK example, where faster payments have been around since 2008, and actually in the last 2 years, the payments in the B2B space have become quite considerable, and today on electronic payments, the 4 out of 10 payments are faster payments. Finally, I'll just close on the fact that if we look at what is happening in Asia, we have a lot of examples how real-time payments are being leveraged, and yes, they bring value into the Treasury space.
Well, thank you so much for that. And I know you touched on this a little bit already, but I'm interested to hear then, off the back of that, where virtual accounts fit into all of this and what some of the benefits are around that as well.
So virtual accounts, been here for a long time, right? We talked about it. It was a few years ago, it was the buzzword of EBAday, okay? I think, again, just to remind ourselves, virtual accounts, ledger records, not a real bank account, and it allows customers to segregate their funds, have better control and visibility on the incoming flows. And again, I must say that over the last 12 months, I've had numerous discussions with customers around the use of virtual accounts. And what's interesting is it can be used for a number of things, either to better manage reconciliation and incoming flows, or also allow for on behalf of payments in a in-house bank logic kind of thing. And maybe just to illustrate an example on the use of virtual accounts and what we put in place recently for a customer. This customer works in the digital space. He has basically loyalty programs, and he really needed to reconcile incoming flows because he wanted to be able to allocate those into his portal for his customers to be able to immediately see those flows. What we put in place was corporate treasury APIs to consume data and see those incoming flows alongside virtual accounts receivables management. And this customer's reconciliation moved from days, Hannah, to seconds.
Wow.
So that was really quite impressive. I think, again, what's interesting here is how you address the customer problem and look at the different steps and see what are those technological solutions that put together will make a difference.
Wonderful. Well, thank you very much for sharing that success story as well. So taking all of that into account then, I think the running theme has been what is the game changer? How would you like to conclude then as well going forward?
I think it's important when in a transformation journey to really assess what are the main pain points. What's the journey? What's the budget you have, right? How many months or years do you have to get to that target model you're looking to put in place? And mine, for a lot of treasury teams, are quite small, so you can't do everything in one go. Mm-hmm. And there's also the assessments of risks and the management of that risks. So it's putting all of that in a big wok and making sure you get everything right and getting those partners that are going to help you address with you those pain points.
Some sound advice to end on. I like the analogy there as well, Michèle. But look, I'll let you get back out there. It's heating up. But thank you so much for sharing your insights today.
You're very welcome. So pleased to be here again.